Hello and welcome to the Friday wrap up here on Landy's Crypto Corner, powered by the Gokhstein News Network. We're looking at Bitcoin here on the daily to start this Friday. And I do want to give a big shout out to everyone that showed up to the live stream where I cover alts, memes, and other things on Fridays at 2 p.m. Pacific Standard Time, 5 p.m. Eastern. We're going to try to keep running this every Friday moving forward. And yeah, it was fun taking a look at things that I haven't looked at in a while, and then also seeing some new stuff requested from the audience in the chat. So I appreciate you all for showing up for that. As I mentioned there, I do these videos, the recorded videos where I take a look at Bitcoin every Monday, Wednesday, Friday. Sometimes we'll jump over into traditional markets to kind of gauge what's going on over there as well. But we are going to take a look at just Bitcoin right now today, and then we'll follow up on Monday by taking a look at Bitcoin and some traditional market stuff. So first things first, I wanted to talk a little bit about some of the numbers that came out. We did have personal income month over month, personal spending month over month, and core PCE, which is basically an inflation metric. So we saw personal income actually beat expectations, up 0.8%. We saw personal spending hit the forecasted target at 0.2%, as did core PCE or inflation at 0.1%. So that combined with with the quarter over quarter GDP metrics that just came out the other day. Paint still kind of a mixed picture, but seeing the income numbers jump is actually a good sign moving forward. And we just kind of have to assess what we're going to start seeing as we come into next week when we get PMI manufacturing numbers. And of course, we'll get JOLTS job openings, and we'll get a few other things that will have an effect on the overall economy or the perception of what's happening. And we'll get services PMI next week as well. So, we do have the end of the month is actually this candle, today's candle, the Saturday candle. So Saturday is, the Saturday candle rather is open right now. And this is going to be an important one to watch over the weekend because of the monthly close. We're going to talk about the daily. We'll look at the weekly, but the monthly is going to be a big one as well. So we'll cover all that today, and we'll try to keep it quick here. Or I'll try to keep it quick, as if I'm multiple people. Maybe multiple personalities sometimes, but definitely not multiple people. But Bitcoin did play out pretty much exactly the move that I described on the Wednesday check-in. So we saw the lower high. We're now at lower lows when we're right around $104,000 after losing 106. We're looking for that 104 tag. That's right around the lower first standard deviation right now. So we do have a trend shift. We had the nice uptrend. We had the lower high reversal setup. Now to lower lows. And if this is going to be a full trend, we would expect to see either some lower price action or a move up to another lower high, right? That's pretty much what to look for from here. But we can set some criteria. If this is going to be a deviation of this uptrend with a potential lower high, lower low trend reversal setup in play, how would we know that that is not going to continue to play? Well, it's pretty simple. Right back above this last lower high at 110.830, that would be a trend break back to the upside. So that would make this a bit of a deviation here on the daily. And maybe it sends things sideways into consolidation, or maybe we get that run back to our 112 high in that 110 to 112 area and possibly higher. We can see that, when we're looking at trend, we should go ahead and take a look at support and resistance. And I'm going to turn on the local support and resistance areas of interest chart here that I've made, that many of you have seen for quite a long time because it hasn't changed very much. Just added the new all-time high in there at 112. And we can see that, price is playing very, very clean. Bitcoin trades and very, very clean, even in its massive moves to the upside and downside. It's a very, very clean trading. And in this case, we saw that the lower high came in right around the 109,360 area, which was the prior all-time high swing over here. We saw a move to the bottom side of the range and subsequent breach in lower term timeframes below the basis band. So we are in the bearish half of the bands right now. and a tag down to below 106 here to the 104 level by the lower first standard deviation. And this is clear as day. Like, it doesn't get much easier than this. If we start to see the lower second get breached, that's around 101, 175 by the support area right down here. If that does start to fail and we get a close below, we also need to see if we haven't already moved down to around 98, 98.5 right by this high over here. I would look for the possibility of this low getting swing if it wasn't already, but if we see any closes below this swing at 100,700 and the lower second standard deviation, we're looking for expansion back into the downside supports here. I would look at the highs over here, somewhere around $98,000, somewhere around the top side of the consolidation here to the $95,000 region. Why am I not just saying, well, 96? Well, it's just fair game between 98 and the top side of these candles at 95. Which is bracketing this very, very, very important support level around, the upper $95,000 to $96,000 area. That's all fair game on the high side of the swing high here to the candle structures here at 95. Anywhere below 95, and I'd be looking for a run right back to the weekly here at 93.5. Bulls want to see that hold up. I'll be quite honest with you, because if it doesn't, then we're right back to the original bottom side of this consolidation range between 92 and 88.7, where we saw the weekly higher low swing come in. So we had the higher low close at 93.5, and we had the higher low swing on that weekly coming in at 89, which was a front run of this 1.168 or 16.8% above the prior cycle high at $69,000. That's where we saw the first bearish candle post expansion from the prior range come in right there. That also was a pivot point on a nice daily higher low swing right there at 88.7. So that would be the zone of interest on any price movement and closes, especially below 93.5, which was that weekly higher low close. And back to the upside, taking out and kind of crawling back into the green zone up here, or the high side structure where we saw the two daily closes come in at 106 perfectly, that daily closing double top. And then we had the swing higher high up there at 109,360. Well, the basis band is right there at 106. So if we do start seeing price trade back above there, I would start to look at, in this case, I would look at a low being set above 107,820 here, and then an attempt up to that 109,110 level. And then subsequently anywhere above there, a trend break for this new downtrend that's presenting itself above that 110,830. I would be looking for a run to the upper second, need to see closes above there and closes above the 112 region to start looking at expansion again. Right now, this is setting up for a range in terms of volatility. And we see that just above there, I would be looking for any kind of closes above 112 and and the upper second standard deviation there to really be a range around 112 to 115, as we would get expansion of the upper third and upper second at the same time, plus a breakout to a brand new all-time high. It's blue skies, stuff like that. And that is kind of where we stand with price right now on the daily. We're going to go ahead and turn this off. We're going to take a look at the weekly, because there's some important stuff to watch on the weekly, which will close after the monthly, because the weekly, of course, will close on Sunday. So I've been talking about this for a long time now, many weeks now, since essentially since we started to see the potential for this low to be set back in mid-April, when we saw even the swing lower low result in a nice green candle that set that swing lower low. I've been talking about the potential of a trend break above 89K, essentially, right? That lower high right there. This one right here, just to make it very clear, which was essentially this a retest of this higher low swing. We have the higher low close on the weekly there. But this is a trend break, right? So what we're looking for, and the most statistically likely outcome of putting in any kind of a high, whether this is going to be the high at 112 or higher, is to start looking for potential areas of interest where the next low is going to come in, as it will likely be either a higher low or equal low. That will present the trend reversal setup on the weekly. And that doesn't mean that the trend will reverse on the weekly, but that will present the trend reversal setup. So you look for something like this, the higher low or equal low by the way, want to see equal lows stay above the close open here at 78, 78.4 or whatever it is. Higher low, equal low would present the trend reversal setup on wherever that low comes in. Otherwise, if we're moving from higher high trend break to lower low, well, that's bad. That would not be good. This would be just a deviation of the downtrend at that point. But statistically more likely to try for a higher low, whether it's equal lows or higher lows, even locally higher lows, stuff like this. Fair game. And then the trend reversal confirmation would actually be back above, this high at 112, or if we end up not seeing a high locked in here, we do have the swing high locked in on this weekly close if it closes anything like this, but the closing high won't be locked in until we see closes below 102, 100. So that's actually going to be the criteria for this weekly. So if this is going to put in a high, this is going to paint a higher high up here on a closing basis. We're very likely going to see this candle be bearish either way, which will set the swing high. But the swing high is not as important as the closing high, which would be set on any closes below about 102, 100. You can just say, for the ease of charting at $102,000, we'll see this weekly closing high set. And then, we start evaluating where the next low can come in, and where it will likely come in, and if it's going to be a higher low, equal low, or a lower low, which would make this a deviation of trend of the prior downtrend. But in this case, more statistically likely to actually put in some sort of a higher low structure and try for a trend reversal near the highs there. But we're early days here, just like back here when we were looking for the low to be set and this downtrend to be broken. It's early days. We got to take it one day at a time, and I will do my best to help guide you all through my thought process on price action as it develops in the coming weeks. But 102, 100, if we see it close below there this week, our weekend, that would paint the high. And that is going to be the following weeks. Even if it doesn't close below there, that would be next week's candle also, same criteria, right? To actually paint the actual closing high. And in this case, staying above the upper first would keep it above that 102, 100. So keep an eye on that. That's essentially around 102.8 or 102.9 to 103. So about $103,000 where the upper first is on the weekly here. And if it does close in here, it still will move up. And if we get a close open, that volatility level ticks up, and so does the basis, which is likely going to end up around 90. It's just below 94. It's probably going to end up around 95, 95.5 or so. And then this is kind of the volatility area of interest around essentially 103, possibly 104 if this moves up significantly for the upper first at the close of the Sunday candle. And then we'd have really a perfect match with our daily zones of interest, 104, and then we've got 95, which would be the top side of those candles I was showing earlier. If we do start to see 100K, 100,700 start to get breached, then the 98 to 95 is kind of the area to look for volatility zones of interest. But of course, we have to see the close. We'll follow up on Monday with that. Weekly for momentum, starting to get up into the overbought zone, right? We're likely going to see the K-read close in there. This is a regular Stoke. So close over close momentum, not the velocity of RSI, which is a Stoke RSI. In this case, usually the biggest moves occur when we see a regular Stoke enter the overbought and oversold zones. Not always, but usually that's where we see them. So it's not a foregone conclusion that this is going to put in a high, and even if it does, that we don't just get a local high or low swing for structural purposes, and then we have our trend reversal set up from there. So something to definitely keep an eye on in that regard. I'll touch on the monthly close and like all that stuff in excruciating detail on Monday, but let's go ahead and take a look at the monthly here. What you're going to hear, and I've said this for a while, no matter what happens, especially with the weekly here. And I want to go back to the weekly just 1 second, because we did not see a close come in above the 109,360. It was basically close open right under it. That is, we're going to hear triple top on the weekly, double top on the monthly. You're going to hear all of this, but none of that, that's all speculation. Whether it it does play out that way or not, doesn't really matter. It's speculation until we see a trend shift, right? And we're seeing a trend try to shift with a break right now in the weekly, so we do have to give it time, right? For the monthly, we're looking at a few different things here. I noted coming into this month, right, into the May candle, that in April we did not actually set the closing low. So we were looking to the May candle to do so. Now, we are going to see the higher low likely set, of course, unless price falls below 95,128 over the course of this Saturday candle. Remember, we're already in the Saturday candle, even though it's Friday still for myself and many here in the United States. For everybody here in the United States. But I would prefer on the monthly to see closes above 102.4, right? The close open highs here. That's what you would prefer to see. But as long as they're closing above 95,128, this will confirm this as a higher low on a closing basis. We already had the higher low swing set as it relates to the $49,000 lows here, right? Now we're looking at closes. So the last closing higher low was at essentially $59,000. And then this is likely going to close the next higher low here at $82,500, right? So that is, we're going to hear a lot of bearish stuff. Should the weekly correct further, probably going to hear the sell in May and go away. I actually vehemently disagree with that particular sell in May and go away, because why would you go away? If you haven't been taking profits here, it's been an awful big run up here. It's you pay yourself on these moves, right? And it doesn't mean you exit your positions fully or something, but you pay yourself, especially if you're trading. We saw a 50.5% move from the low to the high. Like, if you haven't paid yourself this entire time, now's your time that you're panicking. You got to reevaluate your strategy. Point being, if you're selling in May and you're planning to go away, you're going to miss opportunity, right? Because if we do get a high over the course of May was maybe the high, and then June heads down and July heads down or something like that, then you're going to miss opportunity all over the place. So that's in the context of a bullish structure, and even for bounces, if it was going to be bearish, you're going to miss opportunity. So I never am an advocate for the whole go away portion of that. But in this case, was a good profit taking area around the highs, and we'll see how the rest plays out. What do I want to see on the monthly? Well, like I said, 95,128, we need to close above that. That will solidify this higher low close. Staying above, obviously, the upper first, subsequently, wherever that ends up next, once this Saturday candle closes. Probably, what did we see? We saw a tick from right around here, which was about 87 to 90. So it was moving at about $2,500 a clip. We're likely going to see this at right around that weekly area, that weekly higher low close at 93.5, possibly higher to 94 by the upper first. Want to see closes, of course, staying above there, but more importantly, above 95,128 for the Saturday candle here. That's going to close the monthly. And then subsequently, we need to see continuation above the upper second standard deviation. And then we can start targeting volatility areas of interest between the upper second and upper third. If we do start to see dailies and weeklies closing above there, that might lead to the monthlies. Now, the other big thing is we're probably going to get the basis band. This is the 20 simple moving average of the monthly, which is right at $69,000, putting it, right above the prior cycle high. We're likely going to see this start to encroach on this low around the 74,420.69 low. In fact, I would almost venture to guess here we were moving at about 4K a clip. It's going to be probably right on this low or somewhere around it. This high where the 73,835 high came into the 74,420 area. So probably going to be right in the thick of it there. We are seeing a cool down in the context of being in the bullish half of the bands here. We'll talk about bullish and bearish scenarios on Monday, but I don't fade a trend until the end of the trend. I would like to see it again. preferable closes above 102,500. Why is that so relevant? Again, 102.5 or 102.1 is right around where this weekly higher low is coming in. So if we start to see close above 102.5, that would look good. That's a close above the prior closing all-time high for the monthly. Of course, we need to see continuation above the 109,360. But it would also keep the weekly safe likely coming into Sunday with closes above 102.5. Not guaranteed, obviously, but we want to see closes above there in 102.1 if the bulls are going to prevent this high from being set. And that's kind of it. There's not too much else to say. If it does start to fall apart, correct really hard, be prepared for tears on the timeline. Be prepared for all of the fear, uncertainty, and doubt. Be prepared for, the bears who have been silent the entire ride up to be very loud about their opinions on price action. And you're going to hear a lot from the bulls too, pushing back. Ignore it all and just look at the chart. Make your own decisions. Understand what is going on, more importantly, and that way you can take advantage of opportunities when they present themselves, whether you're going to be on the long or the short side. And I wish you all a wonderful weekend, a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe. And of course, as always, stay safe. With all that being said, Landy out. Take care.